Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckholt dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of the Lumber Word, number 117. Thank you for coming. So first, how many people in here listen to just podcasts in general? Okay. Next question, I have a reply to either side of it. How many people listen to the Lumber Word podcast? All right. If you
we got fans out there, Ash.
Yeah. Gotcha. Okay. Just real quick on the intro, we didn't introduce Charles, but I will get you.
No, it's fine. I probably should have stayed in South.
Did we cut you out again?
Yeah, y'all didn't put me in the intro.
You in the intro.
No, I don't. I mean, Ash.
You did. You sent the old one, Ash, right?
Next time you swing and a miss.
I sent the old one.
You sent the old one. Yeah. Matt's not here.
First of all,
Matt's not here.
Little gratitude to Montreal Wood Convention. Alex, thanks for all the back and forth getting this put together and inviting us up here. Stefan, Sitka Forest Products sponsoring it. To the audience, to everybody that listens, and to everybody in Montreal, we really appreciate it. Little introduction first. I want to kind of go around. I'm Ashley Buckholt, Sitka Forest Products, Sitka USA, part of the podcast. Wanted to go around and introduce the rest of the people. So start on my left, Greg.
Same.
Same but different. A little bit younger, better looking.
Where are you
Better
from?
dressed.
Where are you from,
That's
Charles?
Where are you
fact.
from, Charles?
South Carolina.
First time out of the country?
Second.
Second time.
Yeah. First time was with y'all anyway, though.
Right. Exactly.
Yeah.
We may get you over the pond soon.
I don't know. That's a stretch. It's a stretch. We're in the Southern Yellow Pine business. We do a bunch of wholesale trade, as well as have 2 manufacturing facilities specializing in custom commodity trims. We have a huge footprint in the Southeast, all the way out to Texas, and every day it grows in the Midwest. So it's always a pleasure to be now, instead of me saying in the presence of greatness via Zoom, I actually get to see, and we actually broke bread again. So I appreciate the time, fellas.
And we didn't lose a waiter this time either.
Yeah.
Like we did in Vancouver.
Yeah. No, we definitely lost one in Vancouver.
Yeah.
Well,
Fact.
and I think it's great, like for you coming up here from Southern Yellow Pine country into the heart of Spruce Land. You did bring your muscle with you. Mitchell is here, so his wingman is here, which is great.
And I'm Dustin Jalbert. I'm lucky to be a guest here on the podcast. I work at Fast Markets as a business economist. I've been covering forest products for over a decade now. Lucky enough to be covering softwood lumber. And, Ashley, I think I've told you this before, but when I started covering lumber for Reese and Fast Markets back in 2018, you were like my second or third contact that I made in the industry. I think it was at a NALA event.
Sorry to hear about that.
And here I,
You set the bar low,
you, so
low.
I, just thought that was funny, but yeah, so a little bit about me.
Appreciate that. And thanks for being up here again. And you've been on the show a few times now.
Yeah, I think this is the third, maybe.
Well,
fourth
Fast
time.
Markets is an advertiser, right? I mean, you're not here because you've paid to be here. I just want everyone to know. He's here because we wanted to have him on stage with us.
Thank you. I appreciate that.
One person that we're missing today is Matt Beamer, with Hampton Lumber Sales. Matt's usually on the program every week and does the Pacific Northwest for us. One thing I wanted to talk about is how the podcast started. Everybody in this lumber business, we probably talk too much about lumber.
That's what my wife says.
Yeah. And when I was at a previous startup, Greg, Charles, Matt, and myself would talk all the time. We're like, hey, let's start recording some of these. And
It was during COVID. We were pretty bored.
We were. And so we started doing it. In the last 3 years, we actually started putting them out on podcasts, got a producer, and it started growing the audience. I would say each show has about a little over 1,000 listeners right now. That's probably everybody in the industry.
Everybody that matters.
Yeah, there we go. But it's interesting, the people we serve, everybody that's in the supply chain, we get calls from all kinds of people that just want to learn about lumber that have never been involved with it, which is great because we're really promoting the industry itself, promoting the usage of lumber. I know Dustin was going to bring a bunch of charts up here, but we figured everybody has seen charts in these meetings, and Greg said absolutely not.
You can't give Greg all the credit for that, though. Because I think
we wanted to fact check Greg a little bit.
Yeah, no, we definitely did.
I mean, it's necessary.
I'll fact check as needed. We don't need charts, So.
So that's how we started. A couple of cool things we've heard along the way. A lot of the younger people in the industry call us and say they listen to our podcast for basic input that they don't normally get, which, and some people tell us we give away too much information and talk too much.
That's a good thing you brought up there, Ash, about giving away too much information. Because I think about it. I've been in the industry a long time, and I'm kind of happy to be sharing a lot of those things with people. And I mean, some of it's actually of value too, which is nice, right?
This is true.
And I come into the podcast every week, with an idea that, how do I come out of it like learning something? Whether it's talking about the market with other people that have different viewpoints helps me form, I think, a better viewpoint of the market.
It's more of a well-rounded perspective for sure. I mean, that's one of the reasons why I enjoy it so much, because you can get so stuck in a rut based on what you do every day. And having the variability and understanding how they commingle and kind of play with each other, so to speak, it works. And understanding products all the way from where Matt's specializes in and how it can impact our Texas business and what have you, it does. It brings a lot of value for me specifically.
I mean, the other thing I would say too is, and I'm a data guy, right? That's sort of my job and my background, but data can only take you so far, and especially in the lumber industry, it's such a fragmented market, both from horizontally in terms of the producing side, and then downstream how it goes to market. You really have to be out there and talking to people. So I think that's the type of conversations you guys have and bring people together. It's incredibly valuable to the industry, no doubt. So.
And we're definitely not just pushing positions. We're actually talking about experiences. And one thing that Ash and I talked about this morning over breakfast and coffee was, the real big pain point that outside of the obvious, right, is trucking and freight. And I think that's a topic that we definitely need to touch on because, I mean, it's costing a lot of people a lot of money. Opportunity costs are what bankrupt companies. So if there's a way for us to kind of share the pain and share our perspective on that, other people like minds, right?
Absolutely. Well, let's start with a quick market update.
Go ahead.
Okay.
You're the moderator. You're in charge.
I'm going to walk it back a little bit here, but we will do that. And then what we're going to do is go into some convention themes, what we came up here wanting to, the questions we wanted to ask, what we wanted to walk away with. What are some pain points? What are some positives? Supply and demand, and yes, we're probably going to talk about tariffs. We'll try to not touch the third rail of politics, even though that was in every single conversation this week. So let's go over a quick market update on spruce. I'll start there. The whole market, it seems, came up here with some uncertainty. Seems things are changing day to day. On the spruce side and the Euro side, I think the market was trying to find some ground. 2x6 was obviously weak. 2x4 was tough. All the high grades, everything started compressing down to a lower number. Studs were trading at a pretty big discount to print prices. Heard a lot about that.
Okay.
Here.
Good to know.
There's always one person happy and one person,
of course,
excited about it.
Yeah.
But that's kind of what I saw in spruce. But Greg, you actually traded some of it this week. So what was your feedback on the spruce market?
Yeah, no, you're right on point. I mean, post the tariffs last week, the market had a bit of a shock. Futures market fell $100 in about 3 days, and everyone was trying to figure out where the trading levels were going to be. Yesterday morning, I probably would have come in here and been wildly bearish given the tariff backdrop and what I was expecting to happen. Obviously, when I got the pre-tweet about it to be a good time to buy, and I put some orders in, that was great. I did cover a lot of short futures yesterday, and like this morning, I'm going, wow, that might have been premature. But that having been said, I think the market is going to continue to try and stabilize and find a level over the next few weeks. I think it's going to take that long as things kind of shift out, and then. I know we'll talk a little bit more about demand side in a little bit. I'll let Charles give us insight into SYP.
Southern Yellow Pine is in a quite unique scenario because 6 inch is giving back so much, and I mean it's squishy in spruce too, right? But the spreads at 4 inch are commanding between number 2 and number 3 in pine over the last week kind of shrunk. I mean, at one point they were $120. Last time, I think yesterday morning or this morning, they shrunk. Long lengths, 12 foot and longer. They went back down to $75, $80, but as of Monday, they were still $110. So then you take a look at 6 inch number 2 and number 3 in those spreads, and it is what it should be based on where we're at economically and some of the headwinds and the uncertainty that I know everybody in this audience and anybody here can feel, right, or understand. You go to 6 inch and it's a $15, $20. I mean, that is a market that is fluid, that has found levels, there's liquidity. Yeah, there might be some opportunities to buy some volume, but nobody's giving it away, right? It's not in every street corner. You might find one mill or another mill that has what you need in volume, get rid of it, it goes away. That trade's not there. That price isn't there. But 4 inch, I feel like, in pine specifically, has a lot to give back. There's a lot of air in that number. And
in 4 inch?
Yes,
yeah.
Specifically. Mm-hmm. I mean, you look at what happened over previous 3-4 weeks with Euro and Canadian, and the fact how much Euro's coming over, and every person I talk to that deals in Euro while I've been up here is kind of taken aback at the sheer volume that's coming on the East Coast and Texas. So that if those things come and play out the way I think they will, 4 inch pine's gonna sink. But it'll right size itself based on everything else and how it moves. Wides are good. 8 inch is still pretty good, and 8 inch based on the net return to the mill versus cutting 4 inch is still a little bit better. So they're still cutting 8 inch. They're splitting, instead of splitting it back to 4s, they're dressing and drying it. 12 inch, surprisingly, this time of year is very, very weak. And I think Justin Smith can understand that because him and his organization trade a lot of those wides. And,
That's a shout out for you, Smitty.
Yeah. But the big thing is I mean, you look at, 12 inch and specifically 12, 14, and 16. 14 and 16 this time last year, $580, $600? And I mean, you can buy 14 for $315. I mean,
that's a buy.
It's a buy if it moves.
That's
Otherwise,
a buy.
Yeah.
Put it in the shed. Forget about it.
Capital costs.
It's going to be good.
Yeah.
Right? I mean,
that's what everybody thought they did that in October, though.
Yeah. But you sold it.
Some people did.
I mean, one of the things, Ash, that over the last few weeks has been a real struggle for people is, what is the market with spruce mills, not quoting or quoting, with whatever a tariff would be. That some mills continue to sell on the market. Some mills came up with product that was going to ship prior to the announcement of a tariff, and it was pretty heavily discounted, and the relationship with the indexed numbers and what was actually happening out there was probably as wide as it's ever been, and that hasn't changed now. In particular, as Charles indicated on the pine prices, there's $50 to $70 of range.
Yeah, fluff.
Fluff. Yeah.
Absolute fluff.
Yeah.
And the other thing too to kind of take into consideration when you're looking at those composites is you look at what happened June, July last year, and 6 inch 6 inch Southern Yellow Pine and OSB being the canary in the coal mine. 6 inch gave back, I think this time last year at this convention, spruce 4 inch was the highest price it was all of last year. And then it gave back $100, $120. Correct me if I'm wrong, right? And then all of a sudden it gained some traction, right? But then June, July, 6-inch Southern Yellow Pine tanked, everything else followed, and it stayed in the gutter for 90 to 120 days. So it'll be real interesting to see what the market does, especially with some of the zoning changes in R22 and the green requirements that some of these zones are having, right? And I think I don't remember who I was talking to, but when you start to see 6-inch spruce and pine kind of flatten out and find trading levels and find liquidity, I think everything else will kind of calm down as far as downward pressure. Because then all of a sudden the market's actually buying into a need versus hand to mouth, not wanting to pay elevated prices, such as, I mean, some of the prices you're seeing FOB poured on Euro and 4-inch 16s, right? I mean, a week ago they were over $700. I don't know what they are today, but substantial price changes.
Greg, would you say, and Charles, since we trade two different markets,
let's keep it that way.
Yeah.
Come on, man.
Yeah, I share the love, but I mean, y'all are like my stepdads, but still.
So,
did you listen to my dad talk?
I
from
did.
The other night?
I did. I was actually in bed at 9 o'clock. You said
Mitchell,
10 o'clock. Got to bring your
confirm
8 game, and brought it up 15 times, and then escorted us to the bar on Monday night. So and said, "Have."
I wanted to get out of your system.
Well, we did. We did.
So,
and then we listened.
on order files, when you look at Eastern Canadian, Western Canadian mills in the tariff situation we had over the last X amount of months, would it be correct to say I think most mills came into last week not selling their production for quite a while?
Quite a while is
I left that open.
nebulous
That's great.
kind of quite a while. It can be a little, can be a lot.
Yes.
Yes. Yeah, I mean, listen. There's no question that there's been some buildup at mills in front of the tariff uncertainty. Absolutely. I mean, some more than others. Some less than others.
So should we have bought that lumber at breakfast yesterday or not?
No.
No, I bought the board instead.
Okay.
Buy what's cheap and sell what's expensive. So this was we had this conversation a little while ago. I mean, for me, and this is giving all my secret sauce away right here. Charles, I'm going to do it.
I need a notebook.
Yeah. No, you don't need to know. Your mind like a steel trap. If you want to know when the market's going to stabilize and move higher, we have a price determining mechanism, the futures market. And so when you see the cash market fall below futures, when futures is a premium, then the market's not going down any longer. So, like I said earlier, I mean, I bought back some Armays yesterday, and hang on, let me see how bad I feel. I want to see how bad I feel right now. Oh my God. May lumber's $584, and so, if I'm not missing something, cash 2x4s are probably in the somewhere in the low 600s. Someone will tell me it's 625, someone will tell me it's 615, someone will tell me it's 605, but it's the low 600s. You need to see those two numbers reversed to know that the market's found its level.
Yeah,
on its level.
Correct.
Futures always leads cash. And now the only exception we have on that now is maybe the Southern Pine contract. We don't know about that yet.
No, we definitely need more market participation in that for sure.
Yeah.
But I think the education part and the financial settlement mechanism is going to take a little bit longer. And the fact that it's all Eastern versus a whole species segment, right? And I think I had those conversations early on. But for example, I mean, the physically traded delivered Chicago, I mean, that can go to Texas, that can go to the Midwest, and it's a simple freight calculation. But somebody that's buying a ton of pine in Texas, quite frankly, doesn't give a about what happens on the 20416 in North Carolina. But if that's a settlement mechanism, there may be a rub to prevent people from actually participating in that market.
Would you like to address that?
Well, no,
is that something you can talk about?
No, I was just.
Can you talk about that?
Wait,
Please, sir.
I was actually going to backtrack a little bit on the discussion about how much volume is trading in the market, and kind of the thing that crossed my mind for spruce and Canadian supply. Cash prices FOB level, right? $550 per thousand. That's quite above break evens for a lot of Canadian mill operators. And we haven't really seen a lot of market curtailments. So, if mills are running and they're building inventory, it does create this sort of question about, if tariff risks come off, right? There's this tension between building in sort of the tariff risks into the market price, but then if the market is not, is pretty thinly traded and mills are producing, how's this gonna sort of flesh out here? So, but anyway.
Do you think that we helped any people in the marketplace over the last 30 days with some of our discussion about how we felt about the tariffs being implemented?
I mean, I think everyone is just generally confused right now, right? Because there's been a lot of sort of conflicting information out there, right? There's just so many different sort of angles of tariffs that are out there, right? We've got the 25% tariffs on Canada and Mexico, right? And obviously those, at least USMCA compliant goods, right, are excluded now, right? So lumber and panels are in the clear. And then we had this reciprocal tariffs announcement on April 2nd. So everyone was wondering, okay, how's that going to affect lumber? Is that going to get stacked on the Canadian duties? And then, pretty quickly we figured out, okay, that's also going to be carved out. But now we have this looming question about the Section 232 investigation that is
How many days are left on that?
So I think that my understanding, I think the Department of Commerce has 270 days to come back to the president with a determination on whether imports of all wood products are a threat to national security. So, just to your original point, I mean, I think everyone's been trying to sort of figure this out on the fly. And so, I mean, we're the market experts on this, and we're trying to kind of keep up with.
And you're an expert, why? Because you're 50 miles from home?
Yeah.
Isn't that the definition of an expert?
Like the Sarah Palin, the Sarah Palin quote. I grew up on the northern Maine border, and I could see, Canada from across the river. So.
I can see it, right?
Yeah. So there's legitimacy there.
See, I was really just digging dust to see if, I won my seafood tower bet on the no tariff.
Yeah, I think I remember something about, we'd be, the U.S. would be more likely to buy Greenland than.
No, we're not buying it.
Yeah,
we're taking it.
Okay, take it.
So, Greg, I guess the question is, so Greg had a bet with Kip from Vancouver that there would be no
Kip,
bet.
we miss you here.
And you said no bet. So did you win the bet or not?
I think technically
we need a ruling on it, right?
No,
technically there was 2 days.
2 days.
There was 2 days.
There was 2 days. So.
I mean, maybe we got to split it. You think?
But I think we originally only did 30 days, and those 2 days that it was on was after that 30 days, and then Kip tried to renegotiate a little bit.
I mean, what's the duration of this contract here? Because there's still risk here.
So I'm going to continue to climb out on the plank, and so my viewpoint right now, 232, poo-poo. Nothing to worry about there.
Nothing to worry about.
Nothing to worry about there. And my general backdrop now is, with everything that's happened, the whole tariff hullabaloo is probably, we've seen the most of it and the worst of it, and everything's only going to tamp down from here. Over the next 90 days, we're going to get some, I don't do a good Trump imitation, but we're going to get some big, beautiful deals. They're going to be really massive. And it's that's going to continue to settle out. And maybe that's Pollyanna, but it's my Pollyanna.
So just as
it's a big word today.
Yeah.
Okay.
Yeah, we need a translation there.
Yeah.
No,
Charles.
I have no idea.
You don't use that in South Carolina, do you?
No, we don't.
Give us a little bit of a description on the 232.
Well, so I mean, the Section 232 investigations, right? It's the core of it under trade law. It's a presidential power. One of the powers sort of allowed for the president to investigate trade that, in this case, impacts national security. So what that even means, national security, is pretty flimsy, but but generally the courts in the U.S. do not like to sort of challenge presidential powers when it comes to national security, and
that's been reaffirmed in 3 Supreme Court decisions in the last week.
But the thing I'm getting at, though, Greg, is that there's other products that have had Section 232 investigations, right? So automobiles, we have 25% tariffs on automobiles. Steel and aluminum, we have 25% tariffs. So we have other products, and what I think is, when we've talked about this with clients, what is interesting is that wood products for this administration is being paired with these other strategic industrial products, right? And so that to us raises a red flag of, okay, they're, the reciprocal tariffs and these other tariffs, I do agree they probably do want an off-ramp to be able to negotiate deals. But these strategic industries that the administration has identified, and we've heard Trump talk about lumber and timber a lot.
Fields of wood.
Well, yes, yeah. So
just enough.
So I mean, look, who knows what the duration will be? I think that the analog that I think is important to keep in mind, the first Trump administration, the first Trump term, the first kind of trade war, if you will, we had these Section 232 tariffs that were put on steel and aluminum, and they were lifted on Canada and Mexico in a little under a year, and other regions like the EU, Brazil, some of these other critical countries, they also sort of negotiated deals. So that to me is a good baseline to sort of be thinking about this. But that's just to kind of give sort of counterpoint, sort of devil's advocate there, that I think we should be keeping that.
Would you like to bet a seafood tower with me on that?
I would love that.
Okay,
I love seafood.
Seafood tower, no 232 on lumber. Boom.
How many days are left? 240 days? At least we got a time clock this time.
Yeah.
It's definite.
Sure.
Now, one thing I was going to say, though, if you look at how lumber is being lumped in with those critical industries as you described, the two industries that have gotten tariffs and they've stuck are unionized industries, right? You look at the speech at which our president gave. There was a gentleman that also joined him on stage that gave a speech that is part of a what? Union. So the forest product industry doesn't have a union workforce. And not only that, if you look at the relationship that we have with Canada in that very specific industry, wood, right? I would say it is a necessary evil for us to cooperate and for us to work together for the long term because it's mutually beneficial.
Well, and I mean...
And you look at the political play at hand, right? Yeah. You take somebody that's historically Democrat and you give them an opportunity to better.
Yeah.
And they become Republicans.
And I mean, let's be clear. Okay, I won't comment on that piece, but
third rail, I just bumped up against it.
But you did.
But I'm done. That's it. I think they turned my mic off.
One Canadian producer, we spoke with a few days ago said, at least related to the Section 232 investigation, what else do they need to know about us from a countervailing and anti-dumping duty perspective? We've been investigated for 7 years. Why would we be lumped into these Section 232 tariffs, which I think is rationally would make sense, right? That there would be a carve out for Canada.
110%.
But not everything has been totally rational or sort of predictable about the process. Could there be a period where there's a stacked tariff or some other, I think we have to.
I mean, anybody that looks at it, and this was part of my original thought process, why I was very consistent and adamant. Conviction, yes, I was convicted. Not of any felonies. There's already the CVD and anti-dumping?
Yeah.
That's on, so there's already trade action, and that number is going to 35 or 40% in the fall. So, hey, enough damage done. Enough damage done.
Yeah, it's going to be, that in of itself.
Move on, Ash.
Going to be devastating for the Canadians.
I'm done with this.
Yeah, well, let's move on. Let's touch a little bit on supply and demand. We'll include in that the back half of the year, what we think on pricing, and then another top theme of the whole thing: Southern Yellow Pine versus Spruce. Is that going to what's the scenario going to be there?
Demand.
The way we've seen it, we have our kind of model of what demand looks like, and we've shown some of these charts of some of our sort of meetings we've had the last few days. Demand is actually not that bad right now. You look at it on an annualized basis, we're probably floating around about 50 billion board feet of consumption. If you want to put it on a seasonally adjusted annualized basis.
Do we have a chart for that?
It's okay. We'll just talk through it, Charles. We'll talk through it. So, it's been oscillating, but we're probably still above 2019 levels of consumption. The key, though, is we're off by, probably 9% from the COVID, the pandemic peak. So that's what the industry's feeling right now, right? Demand is off. we're still, the consumption levels are reasonable. You look at repair and remodeling, you look at new construction, they've been surprisingly resilient in the face of the interest rate environment we've seen.
But lower, right?
But lower, yeah. We've corrected off of the boom in remodeling that we saw. New construction obviously is being affected by affordability from the high rate environment we're seeing. Builders have adjusted. They're giving rate buy downs. They're providing incentives. So it's in a stable place right now for the most part. But it's still a big adjustment if you're down 9% off the peak.
But so like so as we project out the rest of the year, I mean, do you see the current level status quo, repair and remodeling, new home construction, and multifamily, maintaining these levels through the rest of the year?
So, I mean, there's a lot of risk out there right now. We all know that, right? But I think, look, let me put it this way. If you talked to us 6 months ago, we were pretty bullish on this year, just because we felt that
everybody was.
Well,
everybody, Q1, after what we went through.
Q4, everybody's really bullish for this year.
Yeah. And
yes,
I mean,
110%.
There was a lot of reason to believe that interest rates were going to fall for kind of natural reasons in the economy, the population in the U.S. with all the cross-border immigration, the sort of migration on the southern border, that stuff is slowing down. You think about just like economic growth, it's just from an identity standpoint, it's population growth plus essentially population or worker hours plus productivity growth. Well, the population worker hours is slowing dramatically. So just that alone, and just, I think Benjamin Tal had a great chart showing this yesterday, showing the excess sort of savings for consumers has come off. So there were a lot of reasons to believe that things were going to slow and interest rates were going to come down. But, you think about housing and residential construction, it leads the cycle. So even if the economy is slowing broadly, we've already kind of had a recession on the resi side of the market. So that was kind of our view. I mean, now we're a little bit more flattish growth just because the tariff risks are going to hit growth, hit employment to some degree, even though we're kind of seeing some signs that, we might see some deals happen here and it's not going to be as bad as it was thought. But, there's an my boss, Jennifer Koskren, who manages our team, does a lot of our housing analysis. She reminds us there's a very high floor on, in terms of this pent-up demand for shelter. So, it can only fall so low.
It's definitely there.
Yeah.
I mean,
it's a matter of
we're running
affordability.
1,300,000 and we're underbuilt by like 2 million, 2 million units over, over a 5-year time period. I mean, there's a lot of headroom when the numbers get right. We had this discussion, Ash, about what needed to happen to affordability.
Yeah.
I mean, because that's
wages rise.
Houses
either fall in price.
But I think, but if you look at single family, right, and desire and need for shelter and being short units, right, I think we're the only industry that's involved in that realm that's really taking our medicine. You look at appliance guys, you look at home builders, tract home builders. Some of these guys have not.
Yeah, there's still good margins.
They have huge margins. I mean, I think, a publicly traded officer of one said none of this stuff's affected our margins, but we have 9 to 10 months of inventory. And I know that's not horrible, but they want to run on 5 to 6 months and be able to continue to build because it's a machine, right? They have to continue to do that to get their pricing structures right. But us as an industry in lumber, we have, gotten kicked in the shins, right? And we're always the first ones that indicate where we're going to go economically. I think some people need to, that industry should be able to liquidate that position the same way we're able to liquidate lumber.
And that's
they have to.
One of the wild cards also is, okay, so there's no tariffs on lumber, but think of all of the things that go into a house now that are tariffed. And what that costs. Yeah, I mean, Q1 imports went through the roof because everybody stockpiled a lot. That's going to flush through in Q2, and then we get along to Q3. That's when it's really going to start to hit people. If things aren't negotiated and worked out.
Yeah, we really need rate relief though, and I think because to your point, we are going to get this cost shock even if we start kind of making deals on the trade front. 125%. I can't even keep track now what we're at with China. I think it's
200.
Okay, well, we might pick up our phone in a few minutes and we might be there, but that's going to feed through to builders in some shape or form. And, you know, if they can get some relief on what they're paying for rate buy downs and other incentives, but again, we'll see how that goes. But
one thing I want to do because of time here is talk about what we thought before we came up here, questions you might have had in your mind you wanted to ask people, what you heard from it, what you're going to walk away with, something interesting you heard in meetings and so forth. If you want me to, I can go first. All right, so I think every time we go to a convention or visit customers, we always have a question of what we want to ask, or in the lobby or at dinner. And our question this time, I know, was, where do you think the market's going in the next 30, 60, 90?
That was everybody's question.
It was the novel question. It was good. Hey, listen,
That was
we need
creative.
something out
That was
there.
creative.
But, and we asked that. But I would say some of the interesting things that I'm going to walk away with in some meetings yesterday, talking to a production person, builder, they said that they were...
He said he didn't want you to name him.
I didn't name him. Yeah.
Well,
People said they found the market. They're finding the market. You know, they're doing what they need to do to find the market. You know, March was a good month. That was a positive. One of the really cool things I heard was about freight, where one of our people said, hey, you know, we're having to pay more for freight right now. I think everybody's experiencing that. And as humans, sometimes we say, hey, we're having to pay more for trucks. And his response was, when I buy a 2x4 14 for $500, it goes to $550. I don't go back the next day and buy it at $500. So pay up for your truck to get it to me. But we heard from a lot of different people. That was good feedback. That's why we come. That's the stuff you don't get not sitting in front of somebody. And then last night at dinner was good. We had a good Canadian friend of ours, and we had some European people with us. And as an American, sometimes I only see through the lens of egotistically American or myself. It was really cool to see both to two different countries the way they
look so multicultural now too. Yeah.
The way they look at us, right? And the way, because my theme last night was how do we look to you, right? Or what are you seeing that, you know, you're hearing from you hear what I think. What do you see? And I walked away from dinner thinking differently, right? And I got to go home and do that at home too. Think differently.
That's what your wife says.
That's what I meant.
Yeah, I know. Charles?
Oh, well, I mean, I just wanted to see what everybody's opinion on the Southern Yellow Pine spruce trade was going to be, right? And it seems like there's an undertone of a certain level of acceptance because it's inevitable, right? So that was kind of refreshing to us as an organization, and it allows us to really focus on how we grow that footprint in markets that were historically kind of stonewalled, right? Mm-hmm. Midwest mainly. Upper Midwest.
Yeah.
Oh, we'll entertain it, but it's got to be a huge discount. But now we're running into freight issues. We're running into, lack of space availability at reloads, this, that, and the other, and everything that we do is a truck market. 90% of it, right? So it was refreshing for us to kind of take that information and really understand it, because obviously it benefits us as an organization, but it also helps some of our Canadian counterparts that have a foot in both pond, right? So ultimately, it can be a win as long as we understand the market dynamics and where those markets limit each one. As far as what I learned, I ask questions and people tell me things, and I have an ever necessity need for more information. I like data, but sometimes I don't like graphs and too much data. So bite-sized chunks are good, and keeping things kind of informal has been good, and it's been a good experience for us for sure.
Yeah, I mean, I'll be honest. Usually, I think this is either my fourth or maybe fifth Montreal Wood Convention, and usually coming out of it, have a pretty good sort of consensus feel of where the market's at. And my view, especially coming into this week, was probably more on the bearish side, just given where sort of the trajectory of where tariffs are going and what that meant for sort of growth in the economy. But coming out of this, I'm probably not feeling quite as bearish. I think there's some levels of resignation, some levels of kind of we'll see what happens tomorrow and we'll go from there, right? So I think there's been obviously a lot of, focus on what's happening in financial markets, and so, and that's having such a big impact, the feedback loops, what that's going to mean into the economy and wood products. I think when everyone saw gold selling off, bonds selling off, everyone was feeling bearish, and then next day, things rally, and well, okay, maybe we're getting out of this, right? So, I'm probably incrementally less bearish than I did, felt coming into this week, but I think everyone's just kind of feeling like they're muddling through this thing, right? And so we'll see what happens in an hour or two, I guess. So,
yeah. My takeaway is similar in that, I'm always trying to, seek to understand so I can be understood. And it's a challenge sometimes, especially when I'm hanging with Charles for a long time. I love him, but I'm probably as confused right now about what I think the future is going to bring as I ever am. And it's going to take me some time to get a lot more data and get a lot more feel for what I really think is going to happen, because I think that the delta is really high right here. I think that we can look at demand, and I think we could see demand fall off much more than we're projecting right now, given all of the SH that's happened. But conversely, I say, maybe it can muddle along okay. Mm-hmm. On the supply side, what I know is from last year is that in front of a substantial increase in countervailing duty and AD, there's going to be an incentive for mills to sell and ship their product aggressively for a period of time, especially since these are kind of the best numbers that they've received in the last, since COVID. So, I guess as I'm talking through this, which is always what I do, is try and talk it through to kind of understand what I think more. Yeah, I'm probably going to lean to being more bearish and hope for the better, and not try and pick a bottom. Because Ashley says you always start too soon. Why did you do that?
I do.
Market's falling another $50 from here.
I think we can take some questions.
That'd be awesome.
Or make up some questions.
Who's going to win the Stanley Cup this year? Bruiser? Where are you?
So Dustin, on the Southern Yellow Pine, the live update information, where are you guys getting that from? Who's reporting that?
So you mean the daily price that we started? Yeah. So it's so our team at Random Lengths. So I don't work on the editorial side, to be clear. I'm a business economist, so it's kind of
way to put the disclaimer in.
Yeah. Well, just being clear, I'm not a price reporter, but we obviously know what's going on that front. But it's so we just launched this daily Southern Yellow Pine price, and really it is an extension of the existing reporting that the team at Random Lengths is doing. So prior, obviously that they're doing a biweekly sort of update. So really, that's just expanded to doing a daily sort of check-in with those people who are reporting. So that's not something that the team was able to do overnight, right? That's taken a long time to sort of build a base of folks that want to sort of report that number. But it's essentially the same sort of reporting process that Random Lengths has been doing. But it's really just, building that out to a full 5 days a week. And obviously, a big motivator of that has been this, the rollout of the new SYP contract, which we're really excited about. And I think there's a big market need. So, but it's really the same reporting process. It's just doing it 5 days a week. So,
is that the same methodology?
Yes.
Same sources.
It's not like a
so you just make it up?
No. Come on.
You're calling buyers and sellers.
Yeah.
I think it's done via EDI, actually, is it not?
No, what Ash said, calling buyers and sellers, and in some cases, people can submit their prices electronically too, but the reporters are basically going out and trying to sort of gauge the market from a buy and sell standpoint. So it's the same process that the existing random lengths prices are reported, but it's just, again, on a more high frequency basis. Now, the hard part about that is just not everyone in the market wants to go report that frequently, but that's the key is, it's one new item. They've built out sort of a base of, contacts that are willing to contribute to it. So it's the same process. It's all, based around IOSCO. There's, a lot of sort of third-party auditing involved too. So it's the same process. What I would say, our head of editorial, Joe Pruski, is here. So he'd be a great person to talk about the nitty-gritty details on it too. So, but it's essentially the same reporting process. So.
Thanks, guys. Fun listening to you. Appreciate all the insights. On the 232 tariffs, is there any chance that somebody got in Trump's ear and let him know there was $8 or $10 billion at deposit on the border and said, hey, maybe there's a pot of money, you can negotiate something? I mean, he loves making deals. Could that be the impetus for this coming up?
That's a great question, because we were sitting with somebody the other day that thought one of the reasons they weren't kicking some tariffs in was because that was going to be negotiable.
Yeah, and I think, I don't think he specifically said this yesterday, but I think Jerome Pelletier from J.D. Irving kind of said they actually have some level of optimism because, Trump is a deal maker, and so, I don't think he necessarily brought up the 8 to 10 billion in cash, but
that's really not that much money for him.
Well.
But it's still a motivator.
No, but still,
it's a motivator to get something done.
It's 10 billion Canadian, right? Or is it? And then it's.
To be honest, I haven't seen the updated number, but
okay.
it's around that.
Does that sound right, Steve? Or is it?
Yeah.
Yeah. Okay.
Yeah, but so it's a fair point. I mean, that could be a sort of a piece of leverage there. I mean, another thing that I've heard too, and generally, I've been pretty skeptical that we're going to see any sort of deal. But someone I was speaking to this week also mentioned you could, given all the negotiations and other parts of the trade fronts that we're seeing, could this be lumber be a chip that's added into a broader deal? And to your point, that 8 to 10 billion on the side there, it's totally possible. So I think at this point anything could happen, but. Yeah, we'll see. I think on the other hand, my skepticism still is it does seem that the domestic industry in the U.S. does also have Trump's ear as well, right? So it would be a bit of a reversal, of course, for him. But like I said, anything can happen at this point.
Just as a follow-up to the U.S. industry's position, is it possible that maybe for the first time in a long time there's a little bit of common interest? Because if Trump's talking about increasing 30% of production in the U.S., I'm not sure some of those coalition members are super excited about another 30% of production coming on to compete with their existing.
To add to Steve's point, the thing came out last week about how he's opening up bigger logs in the Pacific Northwest. And so can we even have the tolling facilities convert all those?
Well, there's so much parts of the infrastructure, right? Like, where do we get the loggers? Where do we get the trucking? It obviously would be a great thing for domestic producers in the U.S. to sort of free up log supply, especially in the Western market.
What's current capacity utilization in South and Pacific Northwest?
It's somewhere around probably 75 to 80%, and yeah, go ahead.
So you can't. There's not that much you can go. Maybe you can push it a little bit, but it's not like there's 10 or 15% increased capacity.
Well, the thing is like even separate from the industry operating rates, there's a speed limit in terms of what we can ramp production. So even if we have this spare capacity, let's call it 15% max. We get to 95% operating rates, which is optimistic. The fastest we've seen domestic production grow in the U.S. historically has been like 5% a year, and those they're under very favorable market conditions. And again, it's because there's all these other constraints. There's the logging, labor. You talk to any domestic mill, adding a half shift or a third shift is even just keeping their existing sort of labor manning situation is tough, right? So the domestic industry is not going to ramp up 25% in a few years. That's going to take we did a viewpoint on this to kind of talk through this, and I think you know, in an optimistic scenario, well, I say optimistic, it's not optimistic if demand is flat, but if demand doesn't grow, we could fill that gap, that Canadian gap, in 5 years. If demand is going to grow like we expect it to, it's more like a 10-year process to replace Canadian supply. The domestic market in the U.S. is not going to clear without that Canadian supply. So hopefully that's helpful. But
in addition to that, how do you see the byproduct situation if you're going to ramp up production?
Where the residuals go, right? Like that's always, it's like the forgotten question, right? When you talk about mills, you know, residual income is, you know, something like 10 to 15% of a mill's sort of, you know, cash flow. So if you don't have that, most mills are not profitable, right? So you have to have the residuals. And, you know, we've seen a lot of pulp and paper capacity, and even in the South where we've seen a massive ramp up in production, the residual, you know, piece is a challenge there. You're seeing things like pellet mills come up and biomass facilities to try to absorb some of that. But for sure, I mean, especially in the Pacific Northwest, it's not a big, I mean, it's not a big pulp and paper producing region now. So, you know, if you have whatever, a 10, 15% increase in production over time, there's got to be some place that those residuals are absorbed. The whole, I mean, that's one thing about the forest supply chain. All these supporting industries have to kind of be moving together.
It's such an ecosystem, for sure.
Yeah, so.
Hi, could I have your outlook on MSR, offer and demand? MSR lumber?
Take it away, Riley.
I mean, it looks like MSR supply in the East is plentiful at the moment. The spreads are pretty well compressed, and we continue to see that's an area where we see more and more crossover to southern pine. So, I mean, I guess I would say supply plentiful, demand for Canadian spruce MSR challenging.
Yeah, I mean, you know, with the pine beetle epidemic and the sort of the cutbacks we've seen in Western Canada, a lot of that, you know, a lot of MSR, from my understanding, came from, you know, that producing regions. You know, the pine is replacing it to some degree. You know, I probably don't have as good a sense in terms of the day-to-day what the markets are like. But
yeah, well, the spreads. I mean, the spreads between Eastern MSR and Western MSR are pretty wide.
Mm-hmm. They've gotten wide enough where some of it we've shipped down to Phoenix.
Yeah, but like I say, I think the biggest is that you know, the switch over to pine based on an availability and long term is where the biggest change is.
I mean, it's been a little bit since I've looked at that market specifically, but I don't think there's, at least on the pine side, there's no constraints in terms of, you know, ramping up that you know, that grading. But yeah, for sure, for the spruce, that's, you know, we've seen, you know, you mentioned this, Greg. We've gone from, you know, what, 12 billion board feet of production in 2017, 2016, and we're down to, you know, less than 7 billion board feet in BC. So there's a lot of MSR in that, you know, obviously not all MSR, and that's probably going to continue the pain in the next, you know, few years. So it's going to only see that supply base tightening. So.
And what's the explanation for the wide spread between Eastern and Western MSR?
Well, production.
I mean, relatively less production of Western, and they have 18s and 20s. So
yeah, I mean, people contracted, for instance, to Phoenix, Vegas, Denver, that just want Western spruce. As that production decreases, that spread widens. And again, that's why I said there's been times where we've shipped cars and trucks, you know, like trucks all the way down to Phoenix. It shouldn't work, right? But there's times when there's such a discount and we're buying Eastern MSR at the same price of 2 and better, you know, in a discounted market, you could make things like that work. I think we usually look at it, third quarter is usually the strongest for the MSR spread when it goes out. We always buy MSR if it's the same price as 2 and better. We'll always go to the highest grade, and then we look in the third quarter is usually when MSR moves its widest, and we quit buying it and we just sell it.
What he said.
All right, I think we appreciate everybody coming. And just real quick, if you have not signed up for the podcast, Spotify, Apple, whatever other 75 venues there are, just go to your podcast, type in the lumber word, hit like, accept, whatever it is, and every week when we push it out on Wednesday night or Thursday morning, you'll have it pop up. It's free to listen to. We're happy to give out information. If you ever want to be on the show or know somebody that should be, drop me a note to my email. It's Ashley@sitka, SITKAINC.com.
It's fun, I promise.
Yeah. So appreciate you all showing up.
Thank you.
Thanks, guys.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.